A very good evening, friends. I am Sanjeev Singhal, Chairman of the Auditing and Assurance Standard Board and Sustainability Reporting Standard Board of ICAI. On my behalf and on behalf of my Vice Chairman, CA Vishal Doshi ji in absentia, welcome you to this 72nd program of the AASB for this council year. So far, we have done 71 programs. This is the 72nd program on auditing in 6 months. And so far, 87,000 members have attended these programs. We organize program on every possible topic in the auditing domain, every auditing standard, every element of financial statement, CARO, Schedule 3, etc. We also taken the topics for the MSME audits, and today's topic is fraud consideration for auditors. Friends, it's been the endeavor of the AASB to reach to every member's doorstep. And that is how these programs are being organized. This year, we have also started an expert panel to answer members' query relating to company audits as well as non-company audits pertaining to the auditing matters. We have engaged 50 experts, and this expert panel is running from 16th April, and it will go up to 30th of September. And from first 15 days, 1st April to 15th April, we had done the bank audit panel. Institute of Chartered Accountant of India always believes in technical excellence and empowerment of the members. And we invite your suggestions for the topics in future. Friends, it is indeed a pleasure to have one of the former chairmen of AASB, CA Shyamlal Agarwal ji from Jaipur. Shyamlal ji qualified CA in May 1981 with All India 5th rank. He is practicing as a partner of Mr. Shyamlal Agarwal and Company Jaipur. He's been a council member for 6 years and the chairman AASB for 3 years, if I'm not wrong. He's been the chairman of Peer Review Board in 2015. He's been a director of XBRL India. He's presently a director of Rodisco Limited, and he's traveled most part of the world, developed countries like US, Canada, Britain, Germany, Australia, Austria, Netherlands, Switzerland, Hong Kong, Singapore, Ethiopia, China, and other Asian countries. During his chairmanship, AASB has been very, very active, and in the current year also, we're trying to ensure that every possible matter pertaining to members and the profession is taken care by the AASB as far as the auditing matters are concerned. We have with us our learned speaker, CA Abhishek Gupta, who is a pioneer in the shared service center concept in India and is doing an excellent job. Abhishek has a very wide experience, and we thank Abhishek for agreeing to be a speaker, for the guest speaker for this technical session. Abhishek has served our profession many times in the past. He's a very senior member of our profession, and he has also traveled most part of the world, particularly US, every nook and corner of US. So I'm sure that this will be a very valuable and a practical learning session for our members. Before I hand it over to Abhishek, I invite my former chairman, AASB, Shyamlal Agarwal ji, for his keynote address. Over to you, sir.
Thank you, Chairman. Dear members, I am really glad to work under the chairmanship of Sanjeev Bhai. And, the way he is moving for learning, making the member acquainted with the standards, I think this part we left in my 3-year tenure also. I really admit it that we could not do it. But the way Sanjeev Bhai, you are moving towards, this educating the members for standards, I think this was much needed earlier also, but we have left. Now this way is forward, and members are being highly taken in. Primarily the members has to take a note of the standard. Previously members not inclined to attend these auditing standard accounting seminars, but now why this effort you are making, people are thinking the standards are really worth for the profession. Members, I really thank to my chairman before all of you that he has provided me this opportunity first time in my this tenure of this year that I am before you. And I will not take much of my time because much of your time, because the guest speaker Abhishek is there. He will deliberate in detail in the particular the matter of fraud, where the responsibility of the auditor is normally with the stakeholders. Normally, it is felt that auditor is only responsible. So he will explain the issue. That's all. But what my experience in the audit world is, I would definitely like to share. Chairman is there. Predominantly, what audit require is that we have to follow the standards of auditing, make the maximum documentation, and then keep ourselves that we are a independent auditor. These things are very important. Now, what happens that when we start the work of any entity and we take up the audit, what we normally do is my firm also, I have discussed with my partners also, that we just take the previous year file and then adding there to the current developments and try to conclude the audit as early as possible. This had been the practice in the auditing firms. Might have changed a lot in the coming years and the recent years, but this had been the practice. Now, what standard says is that if we talk to 240, this fraud, other standards also, that what had been in the earlier period may not be true in the current period. And that is why internationally, when we joined the meeting of IAASB, a new word came, which is now very common in the standard, is professional skepticism. What is professional skepticism means? That it is in Indian language, if we take it as a very normal, in the normal words, is that auditor has to have a questioning mind in a manner that till he does not reach to a conclusion, or he does not reach to analyze the risk to a acceptable level or below the low level, then till then he has to make the questions. And the questions means, what are the questions? Questions are so easy and so certain in nature that whenever you audit a transaction, you automatically generate in your mind certain questions so as to justify whether the transaction is for the financial year, whether the transaction belongs to the entity, whether the transaction have supporting documents, whether the transaction has been properly accounted for, whether the transactions require any disclosure has been made, whether the transaction under legal terms have been properly seen, and whether the transaction is not in a manner that it is, what we say is the management or right control system, that it is not influenced by the management in certain matters. Why I use the influence here is that because we are discussing the fraud, where what happens that the in the when we discuss the matter of fraud and as a 240, we mainly concentrate on the management, particularly management overriding the controls. What happens? Certain systems are set up, certain things are moving place, but at certain places while conducting the audit, we see that management override the controls. So on those matters, the auditor has to have the questions in that series. So why I say skepticism here is very important is that when we always have this questioning mind in the auditing system, but what is said is the serial of questions should be in a manner that the particular transaction is aligned under the questions. That is the most important part of it, and that is why the standard SA 240. It is revised recently also in certain terms, because we are going to revise 315. I think the chairman is in process of revising 315 also. So it is directly linked with 315, risk assessment, understanding the entity and its environment. It may have certain reference clauses. When you go to the standard, it will refer to 315, it may refer to 220 also, and it may refer to 540 standard related to the fair value transaction. So linkage of the standard is in such a manner that it becomes easier to understand for the auditor. What not normally, chairman sir, what normally I this is member, that normally members think that standards are very, heavy, burdensome on the member. They are unnecessary, causing issues. They are putting additional law by the institute, like that. Some people talks about it, but what I say is that suppose there should have been a law or a act, that would have been much harder to understand and much harder to implement. Once a law of audit is converted to the standards, it becomes very easy to understand, because standards are those which most people understand and implement and has to do according to the given situation. That is the standard. So standard means in very easy terms while implementing and working under the environment. So that is why what I request all the members, that you read the standard line by line. You will say that if you have written the standard, or you might have been, at the helm of the affairs to write a standard, you would have written the same line and same language. So they are very, supportive to the audit, and that is why the effort which is being taken by the current chairman is in that direction, that each and every standard has to be understood by each member. They will put you in the situation that you can face any transaction for its reporting, for its particularly disclosure, and for the very fact that the generally what things are moving last 3 4 years, that audit is not being done in the required manner, that matter will go away. I will also turn to a specific matter. Certain people and certain members discuss that, sir, you are telling the standards, the fraud is not the aim of the auditor to detect. The fraud is the, it is not, we are not the investigating authority. We are not the person specifically for forensic audit, like that. We are not the person who is specifically for legal audit. What I suggest that when we conduct the audit, we have to take up two process. One is the compliance and one is the substantive. Both the process, when we define and we underline and we narrate, then we take that we have to analyze the matter in a manner that the risk of having material misstatement is mitigated. That's the main part. So you don't think that we are detecting a fraud. What we have to, what all each and memory has to understand and to work on it, is that there should not be a material misstatement at any level, in the financial statement, at the recognition level, at the disclosure level, and at any other level of recording and reporting. So that is the main aim which we keep in mind while drafting the audit plan, and that has to work. So while when we decide and we plan our audit in a manner that there the material misstatement should not be there, and according to that we have the compliance and substantive procedures. So wherever we find an issue that there is a risk of having a material misstatement, we the substantive procedures are, more taken in depth. The like we take the sample, we increase the sample size. Like we take the document, we don't rely on the document, we need additional documentation. And like that, we move on to work that the material misstatement risk is minimized, and at least it should be clear in the mind that there is no material misstatement in the finance statement. Once you have done this process, I think you have already, you will have the base to comply that we have complied the standards on auditing 240 as well. Because the process of audit is not to detect a fraud. We are not working to detect a fraud, but in course of our audit, if we find certain issues, certain instances, certain management or admin control, certain matters abnormal taking place, transaction beyond arm length prices, disclosures not being taken care, the legal compliance is not made, like that, then we go intensively in depth. And while going to depth, we link the situation one by one by one by one, and then we finally reach to the conclusion by taking the professional judgment that yes, there is no material misstatement in the finance statements, and the disclosures required to be made by the act. Then you will see that major part of your fraud, this responsibility has been complied with. Thereafter, then you have to inquire. The inquiry system, again the profits captain used to use the inquire on certain matters. Previously there was also section where 5-6 matters were given. Now again in the company act we have been given 5-6 matters. Again we are making the inquiries. So we normally make the inquiries, but we're not required to report. In that case also, while making the inquiry, whenever we find that there is a risk of having a material misstatement, then you have to stop and then increase the substantive procedure, increase the documentation, increase the examination, increase the sample size. Like that, we have to work on that. And by the time you reach that there is no material statement, then you have done the job. So I think this is the major part where one auditor has to understand, and they should not read only 3 lines that the standard in 7 or 8 para. I think they've written that they even if we plan and perform the audit as per essays, the fraud may not be detected. There remain material misstatement undetected, reported like that. So that can also be the situation there also. So in both the cases, we have to work and to align with the standards in a manner that we are working to have proper reporting, at least the reporting which suits to our own logics and ethics, and then in compliance of the standards on auditing. That is the, I think, the base I wanted to add in my keynote address. And I am not going to the subject directly because subject is being taken care by the speaker, and he is a very learned person. And I request the speaker that the language should be so simple, so understandable, and should be linked with the transaction, and in the manner like the common people, a common person can understand that standards are, the what I wanted to say, that standards are primarily helpful for us to conclude and to conduct and to complete the audit, and they are never a burden on us. They are complete support by the ICI and by the
Thank you very much, sir. Shamlal ji, I think we are not able to hear your voice. Abhishek, I invite you to kindly start your deliberation.
our top, we are all council members. Previously, we used to tell the Bible of the Chahu. And thank you very much.
Thank you, sir. Thank you, sir. Thank you for the valuable address. Abhishek, over to you.
Thank you, Sanjeev ji. Thank you, Shamlal ji. And at the onset, I would like to kind of pass on my big thanks to the AASP board for inviting me to kind of be the guest speaker on this very, very pertinent and important topic of fraud transgressions for the auditors. So I'll kind of start with a small presentation about the standard on auditing, which is SA 240. Just presenting my screen, try to kind of understand that in case if this is doable.
Yes, sir. Fine. It is perfect. Fine, sir. Make it full screen, sir.
Okay.
Yes.
You can see the screen?
Yes, sir. Yes, sir.
Okay. Well, before we kind of really start, thank you, CA Shamlal Agarwal ji, for setting up the keynote. Your last 15 minutes were quite helpful for setting up the tone. That practically as a members, at times we are more focused on the accounting standards rather than the standards on auditing. And considering the emphasis and the detailing what we all need to kind of put across, it is becoming more and more important for us as members on a day-to-day basis to really go and make our understanding, build our expertise on the standards on auditing and how these standards have been kind of interpreted in terms of how we have kind of really applied on a day-to-day basis once we are performing the audits. So thank you for again reminding the importance of the essays which have been kind of drafted by the institute. So before, without taking much of the time, I'll kind of directly dive into the standard on auditing, which is 240 auditors' responsibilities related to fraud in an audit of financial statements. Before we really get into the things, I would like to kind of really design the outline of the next 1 odd hour where I'll be kind of speaking on this topic. So we will be kind of going through very basics, and I think this was a request from Shamlal ji that please try and bring the more simplistic form and format of the conversation so that people don't get really bugged up with the complexity of the language and the standard. So we'll kind of talk about some of the basics. I'm sure that few of you must be aware about this, which is differentiation between fraud versus error. The most important thing, which is a fraud triangle, the reason and the objective why frauds happens, the types of frauds, what are the 2 different types of frauds, and within those 2 different types, what are the subsets of those frauds. The second thing what we will kind of go through is going to be the responsibility for the prevention and detection of fraud. I think again Shamla ji highlighted about this, that at times there is a confusion whether the auditor is a responsible person for the prevention and detection of fraud, or whether the management is responsible, or the people who are charged with governance are responsible. So we'll kind of try and unfold the responsibilities for each and every one of the key stakeholders who are involved in this, and what exactly is the responsibility and how they can kind of really contribute in the overall prevention and detection of the fraud. The third, which is the real essence of SA 240, which talks about the overall objective of the standard on auditing and the requirements what we have to take into consideration. There are about 10 odd requirements which will kind of go in detail about each and every one of them in a more simplistic form and format. The fourth is the specific responses to the fraudulent financial reporting. So once we understand the types of the fraud, we'll kind of talk about how the specific responses needs to be given for the fraudulent financial reporting, and similarly how we need to kind of provide the specific responses to the fraudulent misappropriation of assets. So on this note, I thought it is important for us to kind of really outline the entire program in terms of what are the key lessons, what we're going to cover in the next 60 odd minutes. So starting with the fraud versus error. So as we all understand that when it comes to fraud, the first thing which comes into our mind is that it is intentional. It is something which is being thought through. It is something which is being planned. So that is the reason why it has been called intentional, that fraud is always intentional. Easier to be done when you are sitting in a power. So that is the reason why we kind of talk about management override of controls. So that clearly indicates that management has got that power to kind of manipulate the financial statements or to kind of manipulate the assets of the organization. So that is the reason why it has been called that, how effectively they can abuse the power. And similarly, at an employee level, also the people who are the key decision makers at within their functions can also see it as an opportunity for them to kind of really take the advantage out of their roles and responsibilities. It's a deliberate manipulation of the data, wherein somebody kind of deliberately manipulate the data depending on how and what is the reason behind that, and we'll talk about those in detail. And eventually, the outcome of the fraud is defrauding the stakeholders. So whether the stakeholders are internal stakeholders, whether the stakeholders are external stakeholders, in one form or the other, the fraud has an impact on one of the stakeholders or combined in combination across the stakeholders of the organization or the entity. Vis-a-vis, when we kind of talk about errors, fairly simple. Errors are unintentional. It is predominantly an omission in gathering the information, or it can be an oversight which can happen by the management of by the employee of the entity. And there has been kind of a classic examples of error which keeps on happening on a daily basis or on a quite frequent basis. But fraud is something which happens once in the life cycle of the organization, not something which happens regularly, but yes, the opportunities and incentives are there to kind of really go through this. So I think one other thing is that it is important for us to kind of really understand is the fraud is something which can be conducted by the management, by the employees, by the third parties, or by any other stakeholder who has got one association or the other with the organization. So I think that is where the fraud is something which can be kind of conducted by different set of people. And the intention is very clear to kind of provide an undue advantage to the respective set of people, and to kind of really have a kind of a daunting impact on the engagement on the entity. However, there is another thing which comes into play, which is the fraud risk factors, and fraud risk factors are the events or the conditions which can influence the opportunities and the incentives for somebody to kind of really go ahead and create and commit any kind of a fraud. So those are the fraud risk factors which comes into play. I think we'll spend some time on this fraud triangle. It is the most important thing for us to kind of understand that why frauds happens. So the fraud triangle is it's a thing which has been kind of designed to clearly outlay the three major factors for fraud. One is the perceived opportunity, that what is something which is there in for me to kind of really commit this fraud, and how I can really see it as an opportunity within the organization. The second is the incentive, or normally we kind of call it as a pressure, because that is directly attributable to the fact that whether the management or employees are under pressure of performance. Performance is directly relatable to the revenue, the profits, minimization of tax, and so on. So that is where the incentives and pressure goes hand in hand. The third is the rationalization and an attitude, and it is very, very individualistic driven, or it is very much driven at an management level with the ethos of the management, at how the entire culture and the ethos of the management is, or the board is being designed. So one, and it can be a combination of two. It can be individual avenue, whether it is opportunity or incentive or rationalization, but either of them has got an impact where somebody will be in a position to kind of really go ahead and commit a fraud in the entity. So we will kind of deliberate about the perceived opportunity from an employee mindset and from a management standpoint. So where we really see the opportunity is probably where, as an employee, if somebody is able to kind of very visualize that there are any leakages, or there is an opportunity because of not so effective controls which are being placed by the management. Normally, these are the things where you might have heard that a lot of frauds happens because of the fraudulent submission of bills, expenses, and so on. And that is where there has been a lot of loopholes and leakages within the organizations, where easily people can kind of sweep in their expenses or claims. So normally it happens in that kind of an avenue, or in case where somebody is kind of managing the payroll of the organization and they have got an opportunity to kind of really see whether they can kind of create some fictitious employees or so on, to kind of really increase the overall payout in the name of those fictitious employees. Incentive and pressure, unrealistic corporate targets, which are normally there in the sales organization. So in a sales organization, normally people have got unrealistic sales and targets. And one of the biggest frauds which was being conducted at a global level was Wells Fargo. I think it's a very, very recent fraud which has happened, wherein again there was a huge pressure on the entire sales team to kind of increase the entire customer base. And what the sales team saw it as an opportunity over there was that they figured out the people who have got their savings bank account with Wells Fargo. They created their credit card accounts without letting the customers know about the same. And interestingly, they were able to kind of really create almost 2 million accounts for the customers. So that kind of boosted up some kind of the numbers for the employees to kind of meet their targets. But interestingly, this got highlighted as one of the biggest frauds within this particular in the last 20, 30 years. So very, very recent fraud from Wells Fargo, again, an incentive-driven fraud. Rationalization and attitude, it's more about personal justification. Everyone does it. So classic example is in terms of medical submission of claims. So in case if there is a facility which is being provided to kind of claim the hospitalization of the employees, so or to kind of claim some medical reimbursements, or from an HRA perspective, these are very, very soft targets for the employees to kind of really see and do it. And at times it's driven as an individual, or at times it is being driven by the overall environment within the organization, that if 5 people are doing it in the organization, what is the harm in me kind of doing it for the same? Moving to the fraud by management, again, from a perceived opportunity, this is an easiest fraud avenue because of their power and their control on the things. And it is being very well said that as an auditor, it is difficult for the auditors to kind of catch hold of the fraud which is being conducted by the management, vis-a-vis catching hold of the fraud which is being conducted by, or which has been committed by, the employees. And the reason is because management is the one which is sitting right on the top of the financial statements, or on the have got a very direct control on the entire accounting records and the policies. So they can kind of keep a very close track as and when the audits is performed. So they have got the opportunity to kind of really manage those things, and not to kind of get highlighted in front of the auditors. So it's being very well said that it's difficult to kind of catch hold of the management. Incentive and pressure, again, the pressure to kind of achieve the overall revenue targets, tax evasion. It's again a kind of an avenue where a lot of frauds are happening across the world. There is a very interesting study which I was kind of going through, that in the last 50 years, majority of the frauds which have happened across the globe, those frauds have been conducted at the management level. So there were hardly any frauds which are being conducted by the employees, or there have been hardly any frauds which have been conducted by the third party. So majority of the frauds have been perpetrated by the internal management itself. So if we kind of talk about few of the bigger or the larger frauds which happened in the world, the recent one is the Wirecard one, where probably the management was able to kind of put a hole into the entire financial statements by almost $2 billion. So once the auditors got hold of it, that is the time when they really get to kind of know that there was actually no cash sitting in the books, wherein the company was demonstrating that there is a cash which is sitting in the books. Luke and Coffee, China-based organization, a fraud which is again being initiated by the management, where they, on one side, they have inflated their sales by selling dummy vouchers to the connects of the chairman, and inflating their sales by almost $300+ million. And on the other side, they have also kind of created fictitious vendors to kind of provide them raw materials. So wherein they have kind of did some fictitious purchases to the tune of $140 million. Volkswagen, I think all of us are aware about the Volkswagen one, the biggest fraud in terms of the entire environmental aspect, wherein the company was able to kind of bring in that technology, where in case if the vehicle is going to kind of undergo an inspection, that the test results will automatically gets manipulated. So this is again one of the biggest frauds, though Volkswagen has been fined for almost $25 billion by the SEC only in the US. And still a lot of litigations and legal cases are hovering in and around Volkswagen. But having said that, these are the frauds which are very, very, very difficult for the auditors to kind of catch hold of, when the organization or the entity has gone ahead and played something which is not visible on the financial statements, but they have done a change in the overall technology of the product which they're selling. So very, very difficult for anybody to kind of catch hold of it. But practically, if we look into the Volkswagen story, the amount of fines what they've already paid is more than the amount of benefit which they've achieved by not meeting the emitting protocols. Rationalization and attitude. If we talk about the rationalization, again, it's how the rules of the organization works. The common phenomena is that the tax evasion. So if everyone is kind of manipulating their taxes, so why I as an organization should not do it? So it is predominantly driven from the overall ethos and the attitude of the management which is driving the organization. So I know that I've spent a little more time on this particular triangle, but it is critically important for us to kind of really understand that why frauds happen and how these things kind of we need to, as an auditors, needs to take into consideration. And that is where SA 240 also kind of talks in detail that when we are doing our procedures specifically in and around the fraud areas, we need to kind of really have our mindset, which is being designed, or our approach, which is being designed to address all these three aspects, which is opportunity, incentive, pressure, and rationalization. So with this, I'll move to the next part, which is the types of fraud. So fraud can happen in two forms and formats. One is the fraudulent financial reporting, wherein we kind of really play with the financial records or the accounting records. Probably an example of falsification, alteration, manipulation, misrepresentation, internal omissions, and intentional misapplication of the policies and procedures. The second leg of fraud is misappropriation of assets, where we kind of talk about the misappropriation of goods, misapplication of cash. Common examples are theft within the organization, misrepresenting the overall goods within the organization, and so on. And fraudulent financial reporting, we can kind of talk at length, whether it is on revenue, inventory, your management estimates, and so on. And interestingly, I think one of the things which I would also like to highlight as I kind of progress into this discussion is that the financial reporting frauds can happen at the overall process level, or it can happen at the assertion level. It can happen at a financial line item level or at the assertion level. So this is something which we as an auditors a lot of times don't get into the thick of the things or the detail, that whether that entire financial line item or the process is being designated as a fraudulent area, or the assertion within that particular process or the uh, financial line item should be designated as a fraud risk area. So I think that is something which is also important for us to kind of understand about the fraudulent financial reportings. I think management override of controls, very we keep on hearing this term all the way in terms of what do we mean the management can override the controls and so on and so forth. But what do we really mean by management override of control? So let me kind of give some reflection by simply putting across the definition of management override of controls. So it says that management override refers to the ability of the management or those charged with governance to manipulate accounting records and prepare fraudulent financial statements by overriding these controls, even where the controls might otherwise appear to be operating effectively. So one of the deliberations which keeps on happening across the world is that considering that now the IFCs are in place, internal control financial reporting is in place, in spite of having such a robust and such a foolproof or the effective internal control framework, then how the frauds can still happen? So it's a very simple answer to that. The people who are responsible for the design, implementation, and the maintenance of these internal controls are the ones who are being designated as the management, and they have got all the power in the world to kind of really go ahead and amend and maneuver and manipulate those things. So just from a simplification standpoint, management override of controls is fairly simple for anybody who's sitting in the management and who is also responsible for the design and the implementation of the controls. And that is the whole reason why, in spite of having all the systematic and a robust internal control framework, still fraud happens within the organizations. So there is an interesting saying which I put across over here, which it says, when the opportunity to override internal control is combined with powerful incentives to meet accounting objectives, there is a high likelihood that the management may engage in the fraudulent financial reporting. So if we can if you can kind of really split this entire sentence, the incentive is to kind of increase either the revenue, profitability, manage taxes, and so on, which has been combined with the opportunity where the management knows that they can kind of really manage the overall internal controls. So that is where the possibility of the frauds goes significantly high. Some of the examples or the techniques which are being used by the management to kind of override the controls is by recording the fictitious journal entries. This is the most common area where they kind of really play around with things. Inappropriate assumptions which are being used in estimates. I have done multiple clients in my earlier days where we used to kind of see some illogical estimates which are being prepared by the management, and still they were able to kind of put across all the justifications by getting us a third-party estimate confirmation and so on. But still, having said that, wherever we kind of come across those kind of scenarios, it's always the professional skepticism which needs to kind of come into play and kind of revalidate and corroborate those evidences. Omitting, advancing, delaying recognition, it's again a very interesting thing where they kind of really play around with the revenue side of the things. Concealing the overall facts, I think the facts management, considering they are the one repository of the facts and they know the insider story of the entire organization. So it is very easy for them to kind of really manage and conceal those facts. And last but not the least is altering the records. If we kind of look into the COSO framework, which is being designed or redesigned in 2013, the COSO framework also kind of talks about that internal controls are only eligible to provide the reasonable assurance. They cannot provide the absolute assurance. And the reason why this caveat is being put across by the COSO framework is that the limitations which are there, which are the inherent limitations which are already associated with this entire control management by the management override of controls, is something which cannot give the overall assurance on the things. And that's the whole reason why it becomes pertinently important for us as an auditors to kind of do our additional procedures, our steps, which is important for us to kind of at least start gathering the reasonable assurance for ourselves. As I said, the management override of controls is very, very difficult to detect, and considering the close monitoring and the close management of the things by the management. But having said that, with this understanding about the management override of controls, we'll kind of move into the avenue where we kind of really talk about the real responsibility of the frauds. Who's responsible to prevent and detect the frauds? So the first responsibility sits with the management themselves and the people who are charged with governance. So the folks who are charged with governance and the management bears the primary responsibility for prevention and detection of fraud. They're also committed to create a culture of honesty and ethical behavior in the entity. But having said that, how and what the folks on the charge, the people who are charged with governance or the management, or for that matter, the audit committee needs to kind of take some actions to really infuse that environment which can help to prevent and detect the frauds. So in this case, I think the audit committee's role becomes critically important in terms of how competent the audit committee is, how competent the entire board of directors are in terms of managing or preventing the detection of the frauds. Some of the key things which the audit committees or the folks who are charged with governance should take into consideration are they always have to kind of again have a high level of skepticism in terms of whatever data is coming their way. They need to kind of really strengthen their understanding about the business. So the understanding of the business remains with the management, but it is also important for the audit committee and the folks charged with governance to kind of really enhance their overall understanding of the business so that they can understand the opportunities where the frauds can happen. As a group, they should also brainstorm the fraud risks. What are the possible fraud risks which can kind of occur in the organization? They have to kind of use the code of conduct to assess the overall financial culture, financial reporting culture. And the last but not the least, the most important thing is the whistleblower program. So it is also important for the organization to really implement the whistleblower program. So wherein the people should be encouraged and should be rewarded to really become the eyes and the ears of the management or the audit committee to help them out in any such avenues where they see and observe things are not being done adequately within the organization. There is another aspect of which the audit committees and the CWG takes into consideration is to kind of really expand their network. When we say that they can expand their network, the network is the network of independent auditors, internal auditors, the compensation committees, the committees who can kind of really give them a view from from the employee standpoint. So having that close interaction and conversations with the internal auditors, independent auditors, and the compensation committees, these are the ones who can help to become the real eyes and ears and kind of give an appraisal or appraise the audit committees and the CWGs in terms of any malpractices which are being conducted within the organization or any material weaknesses which they kind of observe as part of their routine checks or their procedures. I think this is how the audit committees and the people who are charged with governance should really strengthen and build that entire culture of honesty and ethical behavior. They should also kind of conduct some workshops with the employees of the organization to kind of really enhance and keep on perpetrating the fact about being honest and being ethical within the organization. Should have committees for the overall oversight of ethics and then run multiple training programs on ethics and kind of conduct some workshops around that. Moving ahead, I think the second responsibility also comes with the auditors. However, the auditors are required to only obtain the reasonable assurance that the financial statements as a whole are free from material misstatements. At any point of time, the auditors are not responsible to kind of give an absolute or overall assurance. But again, having said that, the risk of not identifying a management fraud is much higher in comparison to risk of identifying the fraud which is being conducted by the employees. So once we kind of go to the next one where we kind of really talk about the overall responsibilities of the auditor and how they need to kind of really design their overall program, how they need to kind of, what are the objectives which they need to kind of meet in. So we'll kind of cover it up about the auditors as we kind of progress into the next couple of slides. Having said that, we have already kind of touched upon the inherent limitations. There always remains an unavoidable risk that some material misstatements in the financial statements may remain undetected, even though the audit is being properly planned and performed, not only by the statutory independent auditors, but also by the internal auditors. So with this, we get into a flavor of the objectives. These are the objectives which are being defined by SA 240, wherein we kind of talk about what is something which we want to kind of achieve as an auditor when we are performing the fraud, when we are performing the audit for the fraud risk areas. So the first objective for us is to identify and assess the risk of material misstatement in the financial statements due to fraud. So the first and foremost is that we need to kind of really identify which all areas within the financial statements are vulnerable to the fraud risk. And in case if they are, then what is the risk which is being associated with them at the financial statement level or the assertion level. The second objective is to obtain sufficient appropriate audit evidence about the assessed risk of material misstatement due to fraud to designing and implementing appropriate responses. So with this, what we mean is that as an auditor, it is important for us to gather evidences that And basis the evidences, we assess the overall risk of the material misstatement which can happen due to the fraud by designing and implementing appropriate responses. So when we say designing and implementing appropriate responses, it means that when we are kind of really going through the fraud risk areas, we normally conduct procedures which are over and above our regular audit procedures. We do inquiries with the management and folks outside of the management, which are not in the normal course of our audit procedures. So this is where, as an auditor, it is important for us to kind of really design our responses, which can be an overall response or the specific response, or in a layman language, design the additional audit procedures what we need to conduct when we are going to perform these audit areas, and then implementing and testing and performing those tests adequately. So this is the second objective. The third is the area where we have to kind of provide adequate responses to the identified or suspected fraud risk areas. So when we say adequate responses, that means the outcome of our testings or the outcomes of our inquiries needs to be adequately responded, where we kind of eventually conclude that what is going to be the impact of this particular fraud risk area. Is it big enough on my materiality? Is it something which can kind of trigger me to kind of put a qualified opinion? Or is it something which is not big enough or doesn't fit into that so-called category which is impacting my, or which is misleading my financial statement? So again, just to kind of summarize three aspects, we need to kind of understand and identify the fraud risk areas. The second is that we need to design the audit procedures for those fraud risk areas. And third is our overall conclusion and the response on the procedures what we perform to get a overall comfort and satisfaction in and around our opinion, which will go in relation to these fraud risks. So this is a relatively crowded slide, but it's we can say it is a kind of the entire Bible of the essay 240, wherein we have really zeroed down the avenues where the focus has to be there from the auditors. What are the requirements and what are the steps which they need to kind of follow? So this has been kind of divided into 10 broader parts. The first thing, which is the professional skepticism, I think Shamlal ji has kind of emphasized a lot on professional skepticism. We keep on hearing this word skepticism all every other time, but I think this is one area which becomes critically important once we are performing or we are going through any of the areas which pertains to fraud. So it's always a questioning mindset as an auditor, which we need to kind of bring it out. We need to always perform a critical assessment of the audit evidences which are being thrown in front of us. And the most important thing, and I completely resonate with Shamlalji on this, wherein he said that majority of our audit approach is on the previous year work papers. So we look back into the previous year audit results, we look back into the previous year work papers, we roll forward those work papers, and we just do a kind of an update of the work papers to kind of conclude on the current period. However, that is not the ideal approach of doing the audit. Probably from a documentation perspective, to an extent, 5-10% it's okay, but we still need to kind of give a fresh pair of eyes on the financial statements year on year. We need to kind of look into the processes with a very fresh perspective, and we need to kind of look into the overall areas which we are performing with, for which we are performing the audits from a fresh pair of eyes. So relying on the results of the previous audits does not bring any kind of a satisfaction. And I have been myself been privy to these kind of things, wherein a very interesting thing happened on one of my clients almost 15 years back, that a person who was there in the payroll department, he identified a fraud which was pertaining to the fake hospitalization which was happening with the organization as they were kind of reimbursing the claims outside of the medical policies. So what was happening that the employees have tied up with a particular hospital. They were kind of they were just showing the fake admission to that hospital, paying some commission to the hospital, and eventually there was no admission, and the hospital was raising bills, and the employees were eventually kind of claiming those bills with the organization. So there was this individual in the payroll department who catch hold of that entire jugglery, where he kind of see a trend that the hospitalization which is happening is only happening in one particular hospital, and that hospital is not a known hospital, it was more of a nursing home. And that is where he kind of catch hold of things. Interestingly, in the second year, there was another fraud which happened on that particular organization, wherein there was some fictitious employees who were being created, and in those fictitious employees' names, there were claims which have been submitted within the organization, and the claims were getting processed through the payroll. And to the state of shock, that fraud which happened in the next year was being conducted by the same individual who actually identified the fraud in the first year of hospitalization. So imagine from the situation of the management, imagine from the situation of an auditor, that is an individual on whom you will have the least amount of, you can say, you will never ever think that this is the same individual who can kind of conduct the same, kind of commit the fraud. So I'm just kind of giving you a reflection in terms of never go on the face value of the thing. It's always a kind of a skepticism which you need to kind of bring into play. Never go based as the results what we have seen in the last year. It's always a fresh pair of eyes which we need to kind of put in as the auditors. The second thing is the discussion amongst the engagement team. I think it is coming from SA 315. It's again an extension from 315 where it requires that the engagement team needs to kind of sit together, really deliberate and brainstorm on the possible fraud risk areas. This is where the partners also kind of look into the opportunities and incentives which the organization has in the past. Is there any kind of a past history of any particular transactions in the to kind of go wrong? And then basis the understanding that how the dynamics of the organization or the business has changed in the current year, and basis that they kind of discuss and decide what can be the possible product areas for this year. And this is where they kind of also design the approach of performing the audit, where by bringing the elements of uncertainty, by changing the nature, timing, and extent of the audit procedures. So when we kind of talk about the changing the nature, timing, and extent of audit procedures, probably we can kind of go for some additional audit procedures, we can go for some corroborative evidences as part of the nature. The second thing is that in case if historically we have been seeing a particular trend as part of the revenue, we might kind of change our basis of review. So that will come out as a surprise to the client, because client knows our entire methodology, what we normally use to kind of perform the audit. So the objective of kind of changing the nature, timing, and extent is to kind of bring a surprise element in front of the client, so that the client do not know that or is not being prepared to respond to our regular audit procedures. So timing is wherein supposedly if we were picking up the samples or we were performing the audit at a particular time period of a year, we might need to kind of move it towards the end of the year or probably subsequent periods and so on, so that at least we can kind of get more comfortable at the time period which is more vulnerable to that particular fraud risk area. The extent is that we might kind of change our entire sampling methodology. In case if we were kind of doing a random sampling, we can kind of go for judgmental sampling, we can kind of go for extended samples and so again, if the client is thinking that the auditor is going to pick up any entry which is more than 5 lakhs, who knows that in case if you change the procedure and make pick up the entries which are more than 50,000, and that is where the client would have been accumulating all those fraud risk, accumulating all those entries which are less than 500,000 but more than 50,000. So there can be different ways and means in terms of how we kind of really maneuver and put across our overall nature, time, and extent of audit procedures. The third is the risk assessment procedures. I think this is the area where we kind of build our understanding on the overall depth, length, and breadth of the fraud areas, wherein we perform the inquiries with the management about any of the frauds which have been discovered or suspected. Some of you might have been using fraud questionnaire when you go to the clients, but in case not, then there should be a kind of a use of a fraud questionnaire, which is normally a reflection of how we are putting across our questions to the clients, both from a fraudulent financial reporting and from the misappropriation of assets. Within the two types of frauds, if we remember a fraud triangle, which talks about opportunities, incentive, pressure, and rationalization. So we need to kind of design our questions and inquiries in line with those three things. When we kind of talk about opportunities, what is the current internal framework which the company is having? How much comfortable the org management is from the existing internal framework? Have you seen any kind of episodes or instances of control weaknesses? Have you seen any material weaknesses? Have you seen any kind of deficiencies in the overall control? Have you seen any particular risk which is being missing out to be mapped against a particular assertion or at the financial statement level, right? And how effective is our SAP? How effective is our the ITGCs and ITACs and so on? The second thing is incentives, where we need to kind of really understand that how the dynamics of the business has got changed from the previous year to this year. Is the business is kind of concentrated on particular SKUs or business segment? Is the business is more getting concentrated in particular time period of the year? How the targets of the management has got changed from the previous year? Has it got increased? Is it same? Is it the parameters of the KPIs of the management has got changed and so on? So these are very internal questions which can give you a kind of a flavor in terms of where there can be an opportunity for somebody to kind of go and maneuver the things. And when we are kind of putting across all these questions and we are performing these inquiries, that is where we need to kind of also make sure that we are bringing all the professional skepticism to play. We also go ahead and discuss with the internal auditors what is something which they have observed in this particular year, what are the internal, what are the control weaknesses which exist and so on. So we also do a detailed discussion with them in case if there are any additional third parties involved at any point of time within the organization. So we do our inquiries with them as well. The fourth is wherein we identify and assess the fraud risk area, risk of fraud in revenue recognition, risk of fraud in entity level controls, inventory management, estimates which are being created by management. And this is the area where some, at least I have seen in my experience, that some of the auditors go out and they say that, okay, there is a fraud in the revenue recognition. We cannot do additional procedures across the revenue process. However, if we really go deep into the things, we understand that probably there is a fraud opportunity or an incentive which exists at a cutoff level, right, to kind of ensure the overall completeness. So, or the opportunity is, or the avenue is at an accuracy level. So instead of kind of increasing our overall audit procedures across the revenue as a process, we need to kind of really make sure that we are identifying the risk at the assertion level, and we are categorically documenting in our work papers that the risk is at the cutoff level within the revenue. It is not the overall revenue recognition. Unless there is something where the question is on the overall revenue which is being recognized. So that's the fourth thing. The fifth is evaluating the audit evidence. I think over here, where we need to kind of really figure out that how we need to kind of go for our additional procedures. So we perform analytical procedures. We, in case if somebody is using data analytics, we do our data analytics. And then we kind of respond to the identified misstatement. And in case if it is important for us to kind of reevaluate the risk, we have to do it. The last piece in this framework on the top layer is the response to the assessed fraud risk. So the responses goes in three forms and formats. One is our overall response at the entity level, wherein we talk about that how we as an auditors have kind of really performed our fraud risk procedures. The second is where we kind of talk about the specific responses for the areas where there is an opportunity for a fraud to be committed. It can be at an assertion level or it can be at a financial statement level. And the third is our response to the risk which are being associated with the management override of controls. So I think this is the one of the most important thing where we kind of really conclude in terms of how we have taken our overall comfort in our approach for the fraud risk area. And if we really break these top 6 avenues that defines our objectives, and I would like to kind of take you back. So where we said that identify and assess the risk of material misstatement. Second, we said that design the audit approach, which we need to kind of conduct. And the third is where we said that apply the or respond to the identified and suspected fraud. So I think these are the things which makes it, which kind of really distributed in the top 6 points in this first line. Now, further breaking it down, overall response normally has got 3 avenues. The first avenue where we need to kind of really justify to any other third party or the regulator or to ourselves as an auditor as well, that we have put across a skilled and a competent person to really perform this area. So we normally don't give this area to articles and fraud. This is normally being performed by the managers or experienced people or partners as well. Making sure that these are the people who have got enough experience, they have got the capability to ask skilled questions, make some inquiries with the management and third parties, and kind of really fetch out the right information. And they are in a position to really design the audit procedures which needs to go into play. The second thing is that we need to also critically evaluate the accounting policies which the company has kind of put across, see a kind of a movement from the last year, specifically putting emphasis on the accounting policies and the procedures which relates to any kind of major estimates or any major transactions like business combinations or any kind of impairments and so on. The third thing which comes into thing is the overall unpredictability which we kind of or uncertainty which we bring it out as part of our procedures, which is changing the nature, timing, and extent of the audit procedures. So this is how we kind of put across our overall response. Specific responses we'll kind of talk about through some of the examples which I've kind of laid down in the prospective slides, but specific responses are some of the additional procedures what we have done, which are very unique and very pertinent to the areas where we see an opportunity for a fraud to be committed. So overall response, we discussed. Specific responses, we are going to take it up in the next 2-3 slides. And the last but not the least is the response to the management override of controls. As we discussed earlier, very difficult for anybody to kind of catch hold of a management fraud, but still we kind of perform our audit procedures or response to the management override of controls. So 3 avenues what we normally take into consideration is the thorough evaluation of the journal entries, that examining the journal entries, who are the people who are passing the journal entries, is there a proper delegation of authority, and what time of the year the entries are being passed, what is the nature of the entries, and so on and so forth. Considering again with the blessing of analytics coming into play, it makes the things much more easier for everyone, because now it is very easy for somebody to kind of catch hold of duplicate entries, catching hold of entries which are being passed on, say, a public holiday, a person who's not being authorized to pass the entries, and so on and so forth, amounts, transactions, and so on. The second most important thing what we take into consideration when we are responding to the management override of controls is the management estimates. So we need to kind of make sure that we have got enough comfort and build audit evidence behind the management estimates what the management has taken into consideration. And for that matter, in case if it requires us to kind of do some third-party inquiries outside of the management and the accounting department just to kind of corroborate whether the management estimates are legitimate and fair, we should perform that. There is a classic example which I encountered during my days, probably when I was kind of performing one of the audit client, that they used to kind of make a very interesting estimates for one of their products, wherein they used to kind of say that this product is vulnerable to be challenged by the regulators in the market. So they have to kind of make some provision for the litigation. Though there was no litigation which was there was no legal case which was there and so on, but still the organization was making that kind of a provision. And they said that considering it is coming from the healthcare side, it is being controlled by the drugs and controller and so on and so forth. So that is the reason why we need to kind of make that provision. And they have produced all the evidences in terms of the third party estimates and whatnot. But as an auditor, again, it is important where you feel that you're not comfortable and it is not making sense for how the estimates are being put across. There's no harm for going for an independent estimates, independent parties to kind of get involved and help you with those estimates. So that is again what we did. We kind of engaged a third party legal consultant, and that is how we were able to kind of really question the client that this estimate doesn't seem legitimate for us, and eventually the client has to kind of reverse that one. So this is how we kind of respond to our overall fraud risk areas. Moving ahead, these are more the hygiene factors, and very, very important for us as we kind of really encounter and we kind of go through these entire fraud avenues. The first thing is that we need to kind of take the management representation when we have to take the acknowledgement from the management in case if they are aware of any of the fraud transactions or any fraudulent transactions which have happened in a particular year, any uncorrected misstatements, any errors, any suspicions towards frauds, and the overall effectiveness of the internal controls. So we obtain the management representation letters from that. The second thing is that as an auditor, we need to kind of really make an assessment that in case if we encounter any transaction which is suspected of having a risk of fraud, then we should consider the overall materiality and its impact on the financial statements. And that will define whether we need to kind of qualify or disclaim the opinion. Or in case if the fraud is such like the way it happened in Wirecard, where the auditors were able to kind of figure out the misrepresentation of almost $2 billion on the cash, then probably as an audit firm, we might need to kind of resign from that particular engagement. So in case if we are going for the extreme step of putting our resignation from that engagement, then we need to kind of make sure that we are bringing it out as an information to the audit committee well in advance, people who are being charged with governance and so on. Taking a lead from there, as and when we kind of come across and we become aware about any of the errors, fraudulent areas, any weaknesses in the internal control system, it is our responsibility as an auditor to kind of really communicate those misstatements and errors and frauds to the audit committees, the folks who are charged with governance. And the timely communication is also very important. So it should not happen that we identify something in the month of June and we are waiting for the audit committee to happen in August. So as and when we are aware about any such big thing, it is our responsibility to go ahead and communicate to the people who are responsible for the financial statements and who are the critical stakeholders for the organization. The next one is the communication to the regulatory authorities. It depends in kind of what kind of an industry you are and whether you are listed, non-listed, and so on. So any communication is directly attributable to the overall requirements of the law and in that particular vicinity. So for example, in banks, in case if there is an audit which is being authorized by the RBI, it is our pertinent duty as an auditor to kind of really inform if we encounter any kind of a transaction, fraudulent transaction, or any suspicion of fraud in the banks what we audit. The last is the documentation piece. where we document our overall decisions, what we have covered when we design our overall approach. So discussions, decisions, significant decisions, what we made as part of the team discussions as part of step 2. And then we kind of identified and assessed the risk of material misstatement. So where we have kind of identified the risk statement basis on our inquiries and understanding of the overall environment of the business, and how we have kind of responded to the assessed risk by changing our audit procedures and kind of providing them the responses from overall perspective, specific, and management override of controls. So as I said that these 10 pointers which are being kind of which I've tried to kind of cover up in one single slide is the real crux of SA 240. Again, just for the reflection and the quick understanding of our members, I would like to kind of really walk it through once again very quickly. The first thing is maintaining the professional skepticism. Second is where we kind of engage as part of the engagement team, discuss the potential avenues and areas of fraud, again in line with the requirements of SA 315. And this is where we also design by bringing the uncertainty of elements like nature, timing, and extent. The third is where we kind of put across a comprehensive questionnaire to kind of go and question the management in and around the avenues of opportunities, incentives, and rationalization. We also do our inquiries with the third parties like internal auditors or any other independent auditors which the company has appointed. The fourth is where we kind of really identify and assess the risk of material misstatement. So in case if we've identified that there is a fraud which can happen due to any kind of misstatements which have not been appropriate, then we have to kind of really highlight that and what is the impact of that particular on the financial statement. The fifth is the audit evidence, where we have to kind of perform the additional audit areas and we need to kind of gather the audit evidences. The fifth is the how we have responded to our overall approach by overall response, specific, and management. The last layer talks about our responsibilities as an auditor, where we need to kind of take the management representation of their acceptance and their knowledge of all the ups and downs in the organization, whether it is material weaknesses, internal control framework, or any fraudulent transactions knowledge. Our opinion, whether we should qualify or put a disclaimer, or whether we should continue with the client as an auditor or not. Our responsibility to kind of really be the eyes and ears of the stakeholders by giving them the right information and communicating with them. And then also communicating with the regulatory authorities in case if our client comes under that purview. And last but not the least is how we're documenting the layers, what we have in the top 6 columns. So with this, we kind of give a complete overview of SA 240. But I would like to kind of spend some time in what do we mean by specific responses and what kind of a different fraudulent activities which can really we normally see and encounter. As part of my experience, the majority of the financial statements where I've seen, or majority of the audit documentations what I've seen is that there are 2 common frauds which normally comes into play is the management override of controls. So typically when we're going to start the audit, we normally assume that management override of controls is going to be one fraud risk area. The second fraud risk area, which normally I've seen in all majority of the audit files, is revenue recognition. That is again a very interesting example whether revenue is really a fraud risk area as a financial statement level or at an assertion level. But on the other side, we also need to kind of really understand and challenge ourselves from the nature of business perspective. So I'll give you a kind of an example in the oil and gas industry. So in case if if there's an oil and gas industry and they're into the midstream is where you kind of fetch probably the one the upstream where we kind of really fetch the oil and kind of bring it up and transfer that oil to the pipelines. So is there a revenue as a challenge? The answer is no, because the revenue is being measured and it is being confirmed by the person who is receiving the oil from the pipelines. So the revenue is being recognized on the basis of the confirmation once the pipelines once the person to whom that oil is being transferred from the pipeline, they confirm that they have received this much liters or whatever is that measuring unit, and then basis that you confirm or you kind of recognize the revenue. So in that case, it is a reverse confirmation. So it is normally the revenue is being confirmed on the basis of the confirmation, which is or the documentation which is coming from the customer. So in that case, the revenue can never be a fraud risk area. But I've seen files where that we as an auditor, without applying logics and understanding the depth of the business, we normally say that revenue is a fraud risk area. So yes, in majority of the cases it is, but again, it is very important for us to understand that which part of revenue can be a fraud risk area, and whether knowing the understanding or getting an understanding of the industry, it is important for us to kind of really get that through. So some of the examples what I've kind of tried to capture over here is the side agreements, wherein we kind of normally see the modification of the terms and conditions, some kind of an amendments which have been done on the overall agreements and the documents, just to kind of make sure that it has a kind of an impact on the overall revenue recognition. The second is the bill and hold, where we have billed for a transaction, but we have a hold the transfer of the goods. So because whether the customer doesn't want it or there has been something which has happened wherein we have transferred the goods from one location to the other, but it is not customer's location. So from our books, it is being billed, but practically it is still sitting with us as the good. So this is again one of the areas. The third is the accounting period. So normally clients keeps their accounting periods open beyond the end of the accounting period, which helps them to really enable and pass on the additional transactions that are happening outside of the after the end of the accounting period. So some of the specific responses, which means the specially designed audit procedures, what we have also tried to kind of capture over here are like doing the confirmations with the customers about certain relevant contract terms and the absence of side effects. So whenever we kind of do some confirmations, we normally do the confirmations with the debtors. We normally don't perform any confirmations on the terms and conditions of the contract. So this is something where we design the audit procedures and kind of go for these kind of specific avenues. Doing the inquiries with the entity's sales and marketing personnel or in-house legal counsel regarding the sales or shipments near the end of the period. So normally when we do our revenue checking, we majorly kind of talk to the accountants. We hardly go to the sales and the marketing personnel. But that gives us a kind of a perspective that what made them to park the sales towards the end of the period, any unusual terms or conditions which are associated with these transactions, so which you can only get to kind of know when you're talking to the legal counsel of the organization. The third is being physically present at one of the more locations at the period to observe how the goods are being shipped. So when we talk about physical presence, we only think about inventory, that we perform physical verification of inventory. But over here, we have kind of put across an example, the specific area, which is again guided by SA 240, to really see the overall shipment procedures of the company. The third example, what we have put across over here is the substantive analytical procedures for revenue using disaggregated data. For example, comparing the revenue reported by month and by product line or business segment during the current period with the comparable period ends. I think again, reflecting back on data analytics, considering that now there has been a pertinent use of data analytics, so it makes the life much more easier for us to kind of really identify areas through analytics. So that's a big area. In case if there is the client has got their revenue transactions which are being mapped through system, then we also need to kind of consider to involve our IT risk audit teams. So they are the ones who will give us a comfort on the overall IT GC procedures, making sure that there has been a kind of a proper control on the logical access, control on the overall SAP or the software as the company is kind of using. And from there, we can kind of drive that kind of a comfort that how we are going to be. So if you see that these are the procedures which are over and above your testing of the samples, performing substantive testing, performing test of controls, and so on. So these are very, very specific and pertinent just to kind of identify where there is an opportunity for us to kind of address the fraud risk areas like side agreements, bill and hold, and the accounting period transactions. Over here, we have picked up an example on frauds in the inventory. So if we kind of look about inventory, we are all aware that it's the most vulnerable area when it comes to the valuation. So we can undervalue, we can overvalue, we can kind of provide for obsolescence, we can kind of write down the inventory, and we can kind of move the inventory from one location to the other fictitious location and so on. So there is a whole lot of an opportunity when it comes to inventory. Again, the second aspect which we captured over here is create inventory by falsifying journal entries, receiving and shipping reports, purchase order cycle counts. So companies may participate in these schemes to decrease the cost of sales. So it's more about how we kind of create the fictitious inventory on the books. Specific responses, we need to kind of examine the entity's inventory records to identify locations or items that require specific attention during or after the physical inventory. So it is not that we just perform the physical inventory count basis the biggest location, saying that okay, this is the mother godown of the company. So we need to kind of do the inventory count over here. But practically, we need to kind of really understand the inventory records, and then basis that we need to kind of identify the locations and items. Conducting the inventory at near or end of the reporting period to minimize the risk of inappropriate manipulation during the period between the count and the end of the reporting period. So I think that is something which normally we do it at the year end, but yes, not necessarily only at the year end, but can be also at the on a quarter basis. Observing inventory counts at certain locations on an unannounced basis. So normally when we go for the physical verification of inventory, we kind of let the client know that we will be performing the physical verification on March 31st or April 1. But over here, what we are saying is that prepare doing the unannounced, performing the inventory on unannounced basis. Then the last one of the other examples, what it's been picked up is that we are comparing the quantities of the current period with the prior period by class or category of inventory, location or other criteria of comparison of quantities with perpetual record. So again, these are few of the examples which normally we see as a specific responses or specific audit procedures what we conduct when we kind of encounter these things. But again, this is not a comprehensive list, though it is being mentioned in the SA 240. But having said that, it is still not a comprehensive list, and it is very, very subjective for us as an auditors to kind of really design and define what can be the additional specific responses to address the particular identified fraud risk area. The lesson 5, so lesson 4 was specific responses to fraudulent financial reporting, where we talked about revenue, inventory. Management estimate is again a very gray area. For management estimates, as I've said that maybe we can either perform the independent estimates by involving a third party, or we make sure that the basis which the management has kind of picked it up for the management estimates has been legitimately reviewed by us, and have kind of built up enough understanding around that piece. In terms of the misappropriation of assets, the misappropriation of assets can happen at the cash level, where kind of there can be the theft of cash, and still the book is showing the cash, or the cash is never being received into the books. However, the cash is being received from the customer and it is being stolen on the way. fraudulent disbursement, very common area. A lot of employee frauds happen at this avenue. So fraudulent disbursements keeps, I think there's something which we encounter in majority of the engagements. Ghost employees, where the ghost or the fictitious employee is being created, or a phantom employee is being created, and the payroll is being generated for that particular person, and that eventually that payroll gets transferred to the payroll person. There was a fraud which happened in WorldCom. So WorldCom was one of the viewing rights company, and they kind of did one very big merger in the early 2000s, and after that their CEO was engaged into such kind of fraudulent activity where he was kind of taking loans for his own shell companies, and those loans were being funded by this main company WorldCom. So that got hold of, and again kind of being got through. So in terms of specific responses, we can do cash or securities at or near end, surprise cash counts during the year, reviewing the level and property of the expense report submitted by the senior management. So need to kind of review the overall sanity of the expenses. Then the personal files for the people for whom we have got little to no evidence. So for example, in case if we see employees on the list of the payroll records, but we don't have their performance evaluations. So those are the people for whom we should kind of ask for the personal files. We can also perform a computerized search of the payroll records to identify the duplicate addresses, because one or the other, either the bank account is going to be duplicate, the address is going to be duplicate, something or the other which will be duplicate in case if somebody within the organization is kind of siphoning off the funds from one account to the other. So I think these were the few of the examples on the specific responses against the misappropriation of assets. So I think we kind of covered the main essence of SA 240, though it is almost a 50 pages standard. So my sincere request, my humble request to all the members is that yes, these sessions are important for you to kind of attend, but till the time you don't go line by line, you build your own understanding about the standard. You don't you kind of build the understanding about the procedures what we need to kind of perform. I think it will only help you to kind of come out more effective as part of your role as an auditor. So with this, I would like to kind of rest my thoughts over here and see in case if there are any questions, or Shamlal ji, in case if you want to kind of add anything before we kind of dive into the questions. Anil ji, are there any questions, or Shamlal ji, do you want to add anything before we close it?
Yes, sir. Namaskar, sir. Sir, thank you so much for wonderful deliberation, sir. I have received certain questions. So can you hear me?
Yes. Please go ahead.
I have received certain questions. So first question is, please explain the situation on responsibility of auditor filing ADT 4 in case the fraud is neither committed by an employee nor the office of the company. Fraud committed by third party.
Can you please? Your voice is coming from a distance, Anil ji. It is echoing for me. Can you be a little closer to the speaker?
Yes, sir. So please explain the situation on the responsibility of auditor filing ADT 4 in case the fraud is neither committed by an employee nor office of the company, but fraud committed by third party and reported in CARO.
Yeah, I think the situation where we have kind of seen the fraud which has been committed by the employee of the organization. One is that again, depending on the intensity of the fraud and the impact on the overall materiality of the financial statements, normally we kind of cover it as part of a disclosure in the CARO. That is one thing. The second thing is that we also kind of get it covered as part of our management representation letter. we also kind of quantify the amount of the fraud and the nature of the fraud. So these are the two things which we also kind of take into consideration when we are making such disclosures, whether it is in CARO or when we are covering it out through the management representation letters. However, these things, what I've said, are only applicable in case if the amount and the nature of the fraud is such which is not impacting my overall opinion on the financial statements. So this also applies for the third party as well.
Yes, yes. Sir, can statutory authorities like tax authority, excise authority, custom, GST, etc., officials detect fraud also on the basis of the returns or documents submitted by the registered assessee?
Anilji, I'm so sorry. I'm again finding it difficult to hear you.
Yes.
I think my screen has got frozen, kya?
No, it is fine, sir. ठीक है बिल्कुल.
Okay. Can you be? I'm just your
Yes,
voice
sir,
is
yes, yes, sir. Can statutory authorities like tax authority, excise authority, custom authority, GST, etc., detect fraud on the basis of the returns or documents submitted by the registered assessee?
Yeah, it is very much possible because as we said that normally these are management of our regulatory compliances or commitments. So a classic example is the telecom industry, where the major telecom industries, the companies have got these legal notices from the tax authorities that they have kind of done or managed the entire embezzlement of the taxes. So in case if such kind of a notices or legal highlights are coming to the organization, then there are two ways of kind of looking into it, whether it is really being defined under the definition of fraud, or whether the company has got their own legitimate reasons for underpaying the taxes. So it is very subjective in terms of how and what is the nature of the legal notice which the company is receiving from any of such regulatory authorities. So it can't be termed as a fraud right at the initial instance until unless it has been proven so.
Yes, sir. So one member is asking about your presentation, point number 8, somewhere you have mentioned. So he's asking, do we consider materiality in the fraud?
That's correct. I have answered that as part of question 1, that it is the materiality is always being considered for our overall opinion on the financial statements. Correct. So it is like the way it is very simple. I've been picking up this example multiple times, the employee disbursements of claims. So the disbursement of claims is one line item on the overall expenses, which is employee benefits. Correct. As part of it, if there is one small amount which doesn't even kind of sit into our overall materiality, then there's no reason for us to kind of go ahead and qualify the opinion. However, as an auditor, we are still kind of highlighting it to the regular, to the stakeholders and to the readers of the financial statement that this is something which we have observed, or this is something which has happened. And we kind of justify that why we are not kind of opining differently on our financial statement.
Yes.
So it matters over there. And SA 240 also talks about materiality.
Yes. Sir, it is practically difficult to bring the promoters to accept the possible fraudulent activities indirectly supported by them or through their interferences. It is definitely a challenge for the auditors to give a true or fair view of the financial statement prepared by the company. How we can handle this?
I think I have highlighted this multiple times in my conversation or my discussion that it is rather very difficult for the auditors to kind of catch hold of the fraud. So what my dear member is saying over here is that in case if we get to kind of come across a fraudulent activity or we transaction within the organization, then how come we can kind of make the management or the board to accept that thing? I think that happens probably in a very rare situation, because in case if there is something which is coming on the financial statements and we are as an auditor are able to kind of prove it out, then either the management will come with their own justification or they might have to kind of put somebody in front of the auditors to kind of accept that fact. But normally it is, if we look back into the last couple of decades and the frauds what have happened across the globe, In a very, very rare scenario, the auditors were able to really identify the fraud. Enron is a very classic example. Satyam is a very classic example where the auditors were not even aware, and they have to pay the price of how the management has really managed those things.
So last question. In most of the private companies, inventory valuation is done by the management itself. So what should the auditor do in that case?
Yeah, I think that is something in case if they are compliant with the CARO requirements, then it is important for us to kind of really perform the inventory count. So it is not that we are not required to perform. So if the CARO clearly indicates that we need to perform the physical verification of the inventory, or we need to kind of really give our comfort levels that the inventory verification has been done adequately. So I think as an auditor, we should definitely emphasize to perform it once in a cycle. That's a recommendation, yeah.
Yes.
Not a mandatory thing.
Sir, thank you so much, sir, for giving your precious time here. It was a wonderful deliberation, and we are justified with your presentation. On behalf of AASP of ICI, I extend my heartiest thanks towards you for sparing your valuable time. And once again, acceding to our request on a very short notice. Thank you, sir. Thank you so much.
Well, thank you very much, Anilji, for inviting me. Thank you, Shamlalji and Sanjeevji. And again, very interesting participation. Always love to kind of speak in front of our members. Hopefully, I could have added some benefit to the members and looking forward.
Yes.
So, thank you for inviting me.
Thank you, sir. Thank you so much.
Thank you. Bye-bye.
Yeah.